So every year, right about now, just after Thanksgiving or shortly after, Fannie Mae announces the loan limits for the upcoming year. And these loans in 2023 are going to cover up to $726,000. Lenders around the country start screaming from the rooftops, or at least from their TikTok and Facebook pages, that, hey, these loan limits are up and that's great. You can borrow more. But they don't really tell you why this is a benefit or explain why this is a benefit for borrowers, for real estate professionals. They just give you the new number. And I'm going to try and explain it a little bit. So first, some background about Fannie Mae. Fannie Mae talks a little bit about what they do on their website. And in a nutshell, they provide liquidity to the single family home market by putting together underwriting standards, rules and regulations, and guaranteeing the mortgages and the debt created by those mortgages and issuing mortgage-backed securities. So they create also quality mortgage lending standards and risk management standards, and that allows their lender partners, of which my company is one, to be able to offer mortgages to consumers at the lowest possible rates. And so then you can buy homes, you can buy rental properties, and you can refinance your homes based on those Fannie Mae guidelines. So it's a really big job. But effectively, in a nutshell, they create a framework where buyers and investors can trust everything that's been done meets a uniform standard. So whether it's a pool of 1,000 loans in the Chicago market, or it's a pool of 2,500 loans in Florida, or it's a smattering of loans from all over the country in a pool, investors can count on them being reasonably replaceable for one another and effectively quality investments. But here's how it impacts borrowers, and I think it's really important to understand both borrowers and other folks in the market. Because you can apply for a Fannie Mae conforming loan and the rules are the same everywhere you go, down payment, credit scores, qualifying monthly payment, etc. It's all standardized. And that means there's unlikely to be additional paperwork or hoops to jump to get approved. Especially here at Benchmark, shameless plug, we don't have any overlays or additional rules over and above the Fannie Mae guidelines. Basically, if we get a Fannie Mae automated underwriting approval, that's it. You're approved and it's no problem. The same can't be said for non-Fannie Mae loans. So jumbo loans are a great example. Most jumbo investors have extra requirements, whether that's 10% down instead of 5%, which can be a big number in an $800,000 price range. That's another $40,000. Or some lenders require that you have 6 months of payments in the bank after your down payment and closing costs for closing. And then finally, another investor we have requires 2 appraisals over a certain purchase price, and you're going to have to be forced to work with the lower appraisal, which may or may not match that purchase price. So it brings a bunch of variables into the real estate transaction that we don't control, and it makes the pre-approval slightly less reliable just because we don't have all the data, even if the math works for the customer. So the thing is that a Fannie Mae approval is therefore a benefit. So if you can go with a Fannie Mae approval, you prefer it. I don't think real estate professionals always hold themselves to the understanding of that or the standard with the Fannie Mae approval. Honestly, if you have a Fannie Mae automated underwriting approval and the customer's provided you all that documentation, here we're 95, 98% sure you're going to close, and the only issues could be title or appraisal. And we don't have any control over those at the pre-approval stage. So we can win offers talking with sellers agents about how we do that. Ultimately, though, raising the loan limit every year, which is loosely tied to the rate of appreciation around the country, is good for borrowers. It's good for real estate professionals, and it's good for the folks who invest in mortgages. It makes qualifying, processing, underwriting, closing, post-closing, making your payments reasonably standard. And by doing so, it helps you get to closing on time and on budget. So for 2023, up to a $726,200 loan, you can buy for $764,420 and put 5% down. That's a lot of house for most people. It's a nice commission check for the real estate professional, and it's a solid return on investment for the folks who are investing in Fannie Mae securities. So with all that said, that should shed some more light, some more clarity on getting a Fannie Mae loan. I hope this 5 minutes helped, and if you need anything, don't hesitate to reach out.